Hello and welcome to today's update, Tuesday the 17th. After payroll, the following Monday is always a day of observation, and there was no historical signals at all, so nothing came up on those daily charts, although there are a few points of interest intraday. I've talked about the euro repeatedly. It's been one of the major focuses, and that 118.61 level, which we created an inside bar pattern on payroll and then had a sell signal once the US stock market opened. What is interesting to our traders today is the fact that we are now below the final support, so there is none in the short term. We still have a 118.61 above, which has now created a zone to 118.75, but in the short term, if we're truly bearish, it will struggle to get above 118.05. Moving on to the daily chart, yesterday a stepping process finished on the 120-minute chart. So this is just this short rally up here. The real focus, 116.17. So that is the original breakout point. You can see it here, and then it came back and held it. So very, very important level, and for the strategic players, that's their downside target as long as we're below 118.75. We'd mentioned the euro on the cross rate, so just a quick update there. Euro Kiwi did go lower, hasn't really closed lower, still a little bit under pressure, but not a great. And that's also the case for the Euro Aussie. Whenever we look at the euro dollar, we always look at the dollar index as well to see if there's any confluence there, and there is to a certain extent, with the dollar index breaking above some short-term resistances towards the close yesterday, and that has opened up what we call space to go up to that major 94.10 point. So a little bit of space to move higher. 93.09 is their focus below. Dollar up, gold down, or vice versa. Again, last week repeatedly talked about this 1307.2 point. It's a major monthly resistance, and on cue, and as expected, on the first visit it stops, and we've had a pretty decent move back down again. So that still is a very important high. And if we move down to our day trade chart, 1288 is the final short-term support, so it's currently at 1295.5. Earnings seasons really starts in earnest this week, so there's about 7 or 8 stocks where limit orders are in based on the results that come out later today. Also got a question internally about Amazon, and a client who'd been receiving a lot of analysis all saying the same thing about a head and shoulders top in Amazon. A lot of problems with this theory. The first one is that actually the original neckline, which went from here to here, was broke towards the end of September, and it proved to be a false break, and we've gone ramping higher ever since. The pattern has now gone on too long, and invariably head and shoulders tops just turn into continuation patterns, and everyone conveniently forgets them. And more importantly, we went back and looked at the levels where everyone else was drawing a neckline, and if I just draw it here, everyone else is drawing a neckline and saying that Amazon's in trouble. Well, that's all very well and good, but it's not very good when price is coming directly into one of our weekly support points. So what was a break for the rest of the market was actually a storming support point, and then since then, having stopped at the weekly resistance, a bit like gold has sort of traded in between, we're now holding above it, which also reinforces the idea that this is really just going to turn into a continuation pattern, and we're going to go higher. We'd have to make a close below 931 to say that the market was actually bearish. Okay, that's it for today.